Real estate words and terms with meanings and examples, part number 8. Closing costs, which means fees and expenses paid at the end of a real estate transaction. For example, the buyer paid $6,000 in closing costs on top of the purchase price. This means additional charges like taxes, lender fees, and title fees were paid to finalize the sale. Cloud on title, which means any issue with the legal ownership of a property that can delay or prevent its sale. For instance, a missing signature created a cloud on the title, holding up the closing process. This means there was a legal problem that needed to be resolved before the sale. CMA, Comparative Market Analysis, which means a report comparing similar properties to estimate a home's market value. For example, the agent prepared a CMA to price the home competitively based on nearby sales. This means they used data from similar homes to determine the right asking price. Condominium, condo, which means a private unit within a shared building or complex with joint ownership of common areas. For instance, she bought a 2-bedroom condo downtown with access to a shared gym and pool. This means she owns her unit but shares parts like the lobby or garage with other residents. Consideration, which means something of value exchanged between parties in a contract. For example, the buyer's consideration was $300,000 in exchange for the title to the property. This means the purchase price was the agreed value exchanged for the home. Contingency, which means a condition in a contract that must be met for the sale to proceed. For instance, the offer included a financing contingency in case the buyer couldn't secure a loan. This means the sale would be canceled if the buyer didn't get approved for a mortgage. Conventional loan, which means a home loan not backed by the government, usually with stricter credit requirements. For example, they qualified for a conventional loan with 20% down and a good credit score. This means they got a standard loan without government insurance. Cooperative, co-op, which means a building owned by a corporation where residents buy shares instead of property. For instance, he bought into a co-op and now owns a share that gives him the right to live in the unit. This means he doesn't own the unit directly, but has a share in the building. Covenant, which means a rule or restriction placed on a property, often found in deeds or HOA documents. For example, a covenant restricted homeowners from building fences over 6 feet tall. This means property owners must follow this rule as part of ownership. Debt-to-income ratio, DTI, which means a financial measure comparing a person's debt payments to their income. For instance, the lender denied the loan because the borrower's DTI was too high. This means their monthly debt was too large in relation to their earnings. Deed, which means a legal document showing ownership of real estate. For example, after closing, the buyer received the deed and became the legal owner of the home. This means the document officially transferred property ownership. Deed in lieu of foreclosure, which means a process where a homeowner voluntarily transfers ownership to avoid foreclosure. For instance, facing financial trouble, she completed a deed in lieu to prevent foreclosure on her home. This means she gave the property to the lender instead of going through foreclosure. Default, which means failing to meet the terms of a loan agreement, usually by missing payments. For example, the borrower went into default after skipping 3 mortgage payments. This means the borrower didn't follow the loan contract and faced penalties. Delinquency, which means being overdue on a loan payment. For instance, the mortgage became delinquent after the due date passed without payment. This means the loan was not current because the payment was late. Depreciation, which means a decrease in property value over time. For example, the home's depreciation was due to poor maintenance and a declining neighborhood. This means the house lost value because of wear and its location. Down payment, which means an initial payment made when buying a property, not financed by a loan. For instance, they made a 10% down payment and financed the rest with a mortgage. This means they paid a portion up front before taking out a loan. Due diligence, which means the research and investigation done before completing a real estate transaction. For example, the buyer did due diligence by ordering an inspection and reviewing the HOA rules. This means the buyer carefully checked the property and documents before purchase. Earnest money, which means a deposit made to show serious intent to buy a property. For instance, the buyer included $5,000 in earnest money to prove commitment to the purchase. This means they made a good faith deposit toward buying the home. Easement, which means a legal right to use someone else's land for a specific purpose. For example, the utility company had an easement to run power lines across the backyard. This means they had permission to access the property for utility work. Eminent domain, which means the government's right to take private property for public use with compensation. For instance, the city used eminent domain to build a new highway through residential land. This means the government took property for public use and paid the owners. Encroachment, which means when a structure crosses into another person's property without permission. For example, the neighbor's fence created an encroachment on the homeowner's yard. This means the fence extended into someone else's property illegally. Encumbrance, which means a legal claim or liability that affects the value or use of a property. For instance, the property had an encumbrance due to an unpaid tax lien. This means there was a legal issue attached to the home that needed resolution. Equity, which means the value of a homeowner's interest in their property after subtracting debts. For example, after 5 years of mortgage payments, they had built up $60,000 in equity. This means they owned that portion of the home free and clear. Escalation clause, which means a contract term allowing a buyer to automatically increase their offer if higher bids come in. For instance, the offer included an escalation clause up to $500,000 to beat competing buyers. This means the buyer agreed to raise their bid if someone else offered more. Escrow, which means a financial arrangement where a neutral third party holds funds or documents until conditions are met. For example, the buyer's deposit was held in escrow until the sale was finalized. This means the money was kept safe by a third party until the deal closed.